Good afternoon. My name is Jay Pronowski, founder and principal of 12 South Advisory. Thank you for joining us today for our scheduled weekly Facebook Live. Today we're going to talk about how to maximize tax savings with heavy equipment write-offs. I'm sharing my screen here, so we'll get started. We're also going to send a copy of the recorded Facebook Live here that we do today out to our everyone that's signed up for our newsletter, our weekly newsletter. So yeah, if you can't make it today, don't stress. So yeah, who qualifies for the heavy equipment tax deduction? It's not just applicable for construction companies, it's applicable for all sorts of small businesses. If you're self-employed and you're a small business owner, um, tax deductions are a good way to lower your tax burden. Um, so yeah, it's not just like we said, it's not just applicable to certain niches or industries. Small businesses are relevant to this IRS standard. So yeah, the keys to being able to deduct larger equipment items and vehicles. It's important to use tax savings opportunities when possible. No one wants to overpay in taxes. They often reduce taxable income, improve cash flow. Um, CPAs, it's good to consult your accountant or CPA throughout the year instead of just at tax time during tax prep. Um, we are, very valuable to small businesses, and if you want to get the full value from your CPA, communicate throughout the year and often for maximum benefit. Big purchases aren't always thought through, and timing is everything. So yeah, we're going to hit on some of these topics a little deeper here in this PowerPoint deck. So yeah, the opportunity, which is the topic of today's Facebook Live. Heavy equipment purchases can help to reduce taxable income within a small business immensely. They can also offset high profit years. If you're having a good year within your small business and you're seeing high profits in that particular year, it might be a good idea. Or if you're in need of a new vehicle, a work truck, it might be a good idea to invest in a new truck or whatever it is, SUV. Also allows you to reinvest savings back into the business. And as we know, um, interest, grows at, not just simple, compound interest is like a snowball effect. So yeah, it's important to use investments to your investment vehicles to your advantage. So yeah, IRS Section 179 is instead of writing off equipment little by little, depreciating it over time, you're able to, in some cases, take the entire tax deduction up front. Without Section 179, you deduct the purchase over several years. So in this case, in this scenario, what we're talking about today is going to be your vehicles that weigh 6,000 pounds or more, your manufacturer max load weight, which can also be found in, I believe it's the driver's side door on the sticker there, if you're curious to see what your car weighs. So a standard like half-ton pickup, chances are it's not going to be 6,000 pounds, but a Ford Raptor may, you know, in most cases, a Ford Raptor is a good example of a vehicle that can be eligible for this Section 179 deduction. So yeah, what qualifies? Like I said, a Ford Raptor, commercial vans, a Range Rover Sports, or a G-Wagon. In these scenarios, though, keep in mind SUV cap comes into play. Trucks are going to be able to be deducted in their entirety if they're greater than 6,000 pounds. whereas SUVs can only be deducted around $30,000 a year per the IRS because they do not have a 6-foot bed. So yeah, um, any sort of pickup truck that you get, if it's over 6,000 pounds, the bed has to be greater than 6 feet. So as long as it's a regular cab, or it could be a long bed extended cab, or long bed crew cab, things like that. There's different variations that you can get. As long as the bed's greater than 6 feet, it will be eligible. So the other requirements are the vehicle must be used within the business for greater than half of what the useful life is. So um, if you're getting a vehicle, it's got to be used, um, more than half for the business um, compared to personal or recreational. So it must be placed into service before the year end. The vehicle must be placed into service before year end. So it must be added to the fixed asset module within your accounting ERP system before year end. It also must have enough taxable income to benefit. So yeah, the vehicle can be new or used. Keep in mind, it doesn't just have to be brand new. You could buy it used as long as it's new to you in that case. Um, so like I mentioned, the business gross profit must be greater than the cost of the vehicle or the amount of the write-off deduction. So if it's an SUV and you've got $40,000 gross profit, you could deduct the $30,000 for the SUV, and then you'd only have to pay taxes on $10,000 in gross profit. So yeah, an example here. Marty owns a $3 million construction company. He purchases a Ford Raptor, which is greater than 6,000 pounds, for his business with the intention to use the vehicle to ride around town and give estimates to prospective clients and at job sites. So before he purchases the vehicle, his business profit is $750,000, which is after all expenses, operating and whatnot expenses. The equipment purchase, we'll round it off to be $100,000. So prior to the purchase, he'd have to pay taxes on $750,000 after the purchase. And with the help of the Section 179 deduction, he'd only have to pay taxes on $650,000 of his gross profit for that particular year. So in this situation, obviously the truck lowers the amount of tax that you pay to the IRS. You get a fixed asset for the business, and also get to keep more cash in your bank account. So questions to ask yourself, just some simple questions to ask if you're unsure of whether or not it's a good idea to purchase a new vehicle for this to be for this tax write-off to be a good idea. So if yes, will I owe taxes this year? If you owe taxes, the vehicle purchase may be justified. If not, the benefit might be best to wait on this purchase. Is it going to be a high income tax year? If you're going to have a big profit year and your business is doing good for that particular year, it's obviously the best time to purchase, as you're going to lower your gross profit with the purchase of the vehicle, as well as or excuse me, you're not going to lower your gross profit, but your taxable income is going to be lower with the purchase of a vehicle. If you're going through some struggles, maybe it's a recession, you're having a lower profit year, it might be best to hold off on the purchase of a vehicle and maybe wait till next year when the grass is a little greener to purchase. So yeah, this is our Facebook Live for this week. You can follow us on Facebook here, Jay Gronowski CPA, as well as Instagram, 12 South CPA. We're going to be trying to post a little bit more to these social media accounts, so be sure to tune in. You can find us on LinkedIn as well. But yeah, book your discovery call today, and yeah, we'll see you next week. Thanks for tuning in today, and have a great weekend.